In this video I am going to be sharing the best ways of using trend lines to successfully trade the markets. But before we start, be sure to subscribe to our channel so that you don't miss on any of our new videos. With that being said, let's get into today's video. Firstly, let us understand what is a trend line and how does it work. Just like support and resistance levels, trend lines are lines that show potential areas of price reversal. The only difference between the support resistance levels and trend lines is that support levels are horizontal lines, while the trend lines are sloped lines. In an uptrend, we can see that the trend lines are sloped upwards. Similarly, in a downtrend, we can see that the trend lines are sloped downwards. But the big question here is that how do you draw a trend line? Drawing trend line is easy, but when you are starting out, it can be overwhelming. Hence, I have created 3 rules for drawing trend lines. Rule number 1. Only look at the major swing points. Look at this chart. Here we can see that the price is in an uptrend. Now, here are the potential trend lines that could be drawn. But when we have so many trend lines plotted on the same chart, it becomes really difficult to trade. We need a more clearer chart. So, let's start over again. This time, let us first identify the major swing points on the chart. Here are the major swing points. Now we will plot a trend line by connecting these swing points. It is that simple. We will only look at the major swing points when we are creating the trend line. Most of the time, the best trend lines are pretty clear straight away. The second rule of drawing trend lines is that you need at least 3 touches to confirm the trend line. I have seen many traders, especially on YouTube, say that you need 2 touches to confirm a trend line. But think about it logically. You can pick up any 2 points on the chart and create a trend line. But when there are 3 points that fall in a straight line, it becomes a confirmed trend line. Hence, I always look for at least 3 touches to confirm a trend line. The third and the last rule of drawing a trend line is that sometimes we have to use 2 parallel lines to appropriately draw the trend line. Just like support and resistance, trend lines also are areas of possible reversals. This means we cannot expect the market to reverse exactly at the trend line. Sometimes the market can reverse before hitting the trend line. On the other hand, sometimes they may go beyond the trend line before reversing. Hence, we need to think of trend lines as an area rather than a line. Look at this chart. We can clearly see that there are 4 swing points. Our job is to create a trend line. The problem is that if we connect point 1 and point 3, we miss point 2 and point 4. To solve this problem, we will create a channel. In other words, we will draw a second line to connect the second and the 4th point. Now, the area between the price channel becomes the area of support. Hence, we can expect the market to reverse after entering this area. If you follow these 3 rules, you will be able to plot the trend lines with high accuracy. In the beginning you might find it difficult, but as you keep on practicing, you will master the trend lines very soon. With that being said, let's get into the strategies. The first strategy is a trend following strategy. This means that we will try to catch up moves in an uptrend and catch down moves in a downtrend. In other words, we will try to enter the trend on the pullbacks. In order to achieve this, we will use the trend lines in conjunction with support and resistance levels. Let us look at an example to understand this strategy. Here we have the 15-minute chart of the Euro-USD pair. Here we can see that the price is making higher highs and higher lows. Hence, this is an uptrend. This means that we will only look at buying opportunities. The first step is to plot the trend line. We will do so by connecting the major swing points. Here are the major swing points. We connect these swing points to create the trend line. Now, as the price moves on, we see that the pair has reached the trend line again. As I said earlier, there is a possibility that the price will reverse after touching this trend line. Now, if we look closely, we can see that the price is at a level which has acted as a support before. This also signals that the price could reverse after touching this area. This means that in this area there is a high confluence between the trend line and the support level. Hence, we should buy the pair at this level. Now, to enter the trade, we will wait for any type of candlestick formation to trigger our entry. Here is our entry trigger. Here we see a bullish engulfing pattern, and we buy at the close of this candle. We will keep our stop loss below the trend line, and we can keep our target at 2:1 risk to rewards ratio. And as you can see, the price reached our target. Let us now look at a sell trade. Here we can see that the stock is in a downtrend as it is making lower highs and lower lows. So, we identify the swing points on the chart and mark the trend line. Now look at this point. After making a good down move, the price has pulled back at the trend line. So, there is a probability that the price might reverse after hitting the trend line. At the same time, we can see that the area coincides with a major level of resistance that has acted as a support before. This also signifies a strong point of resistance. Therefore, we can say that this area has a confluence of the trend line as well as the resistance level. So we expect the price to resume the downtrend after hitting this level. So we wait for a bearish candlestick pattern to appear. As you can see here, two bearish hammer candles appear in quick succession. This is a perfect opportunity, and we sell the stock here. We keep our stops above the trend line. Subsequently, we keep our targets at 2:1 risk-reward ratio. And as you can see, the market gave a sharp sell-off after our entry. This brings us to the second strategy, that is the trend line breakout strategy. When the price is trending in one direction, it will never break its trend line. But when the price does break the trend line, it can indicate a strong reversal. If we catch the breakout of the trend line, we can virtually ride the next trend. This is the reason why trend line breakouts are very popular among traders. They give the opportunity to enter the trend at an early stage. But the problem is, a lot of times, the price does break out of the trend line just to reverse and resume the trend again. This type of price movements are called as fake outs. Fake outs can be detrimental to your trading account and can result in loss of capital. To avoid getting trapped in fake outs, we will use the volume indicator. The volume indicator simply shows the amount of shares being bought and sold during that particular period of time. We don't need the exact volume of each candle. Instead, we will just look at the size of the volume bars and compare them with each other. Let us look at a trade example to understand the strategy. Here we have the Apple stock on a 15-minute chart. As we can see, the price has been making lower highs. But it is facing difficulty in breaking below this price area. Therefore, we spot the swing points on the chart and plot a trend line connecting them. Now we want to see the price break above this trend line. Such a breakout would indicate the start of an uptrend. Let us zoom in to see the candles clearly. Here is the same trend line that we were looking at before. Look at this candle. Here we see that the price has gaped up and broken the trend line. But at this point, the price could easily reverse and continue the downtrend. To confirm a strong breakout, we want high volume on the candle that broke the trend line. Again, this is the candle that broke the trend line. Now, look at the volume. As we can see, the volume on this candle is relatively higher than the volume for the previous candles. This indicates that the breakout has been backed by a large number of traders. And such breakouts have a very low probability of failure. So, we buy the stock at the close of this candle. We will place our stops below the low of the trend line. And we will place our targets at 2:1 risk to reward ratio. As you can see, the market gave a strong up move after our entry. Let us now look at a sell trade. Here we have the GBP/USD pair on a 15-minute chart. As we can see, the price has been making higher highs and higher lows. Rather than a trend, the price movement looks like a range that is slightly sloped upwards. But anyways, we create a trend line by connecting the lows. And now, we will wait for the price to break below the trend line. Here is the breakout. Here we see that this candle closes below the trend line. Look at the volume on this candle. As we can see, the volume is rising as the price breaks the trend line. This is a clear sign that the down move is being supported by the volume. Therefore, we sell the pair here. We will keep our stops above the trend line, and we will keep our targets at 2:1 risk to reward ratio. As you can see, the price sees a strong sell-off after our entry. This brings us to the end of this video. So here I have given you 2 amazing strategies that you can implement today to achieve consistent profits. In return, I ask you to subscribe to our channel so that you don't miss on any of our new videos. See you soon.